Okay, good morning. This is Saif. I'll be delivering the morning brief for the 26th of May. As Anthony so kindly asked me to do so last night. So, where do we begin? We've seen some big moves in the market this morning and yesterday. Starting off with oil, which was clearly one of the most exciting moves yesterday, albeit rather tricky to trade. As we all know, we had the OPEC meeting, and what was decided was to extend the cuts by another 9 months, so continuing the 1.8 million barrels a day cut for another 9 months. A reduction in the supply should then theoretically increase the price of oil, but this is not what we saw, and this is what Anne was discussing yesterday leading up to the event. He was saying this has already been fully priced in. The market has been discussing this, and if we look back at the charts, we can see that since around mid-May leading up to the event itself, we've had a phenomenal rally in the price of oil. Let's just mark this up here, almost 20%. So 20% in less than a month we've seen oil gain. This was all due to everyone anticipating them cutting the production of oil further to start to buoy up the prices once again. And as I explained to the stage 2 guys and stage 1 when I'm there, the market moves in anticipation. So the market was already fully priced in for a 9-month cut, so there's the aspect to buy the rumor and sell the fact. And that's what we saw going on yesterday as soon as the decision was announced. Well, actually just before, once the source comment started to come out, but this is quite typical from OPEC nations. Just the importance here of handles. I was in the room with stage 2 people, and they were looking to go short the $52 handle, and then afterwards they were cursing me when I was telling them they're not allowed to. It just so happened that as soon as we touched $52, that's exactly when the announcements came. The reason I was telling them not to do so is the fact of the matter is that would just be gambling at that point. They didn't know what the decision was, and we can speculate as much as we want. However, post decision or the source comment coming out, there were a number of moves. Obviously, there was a break of the afternoon session low, there was a break of pivot, and then everyone was sort of scratching their heads thinking, okay, why did this happen? Why is this such an aggressive move lower? But this was something which we'd been discussing coming into the OPEC meeting. So we broke all the way down, straight through pivot S1, all the way through to S2 before finding some support, retracing the full move, candle closing just above S1 and then bouncing back off pivot, and then continuing on, we saw this move start to pick up once again, coming into the European close. Oil ended up closing the day, I believe it was minus 0.48%. Now this is in itself quite interesting, because even though the Saudi minister came out and said he doesn't pay much attention to intraday swings in the market, what benefit does OPEC have now that they've cut production? It's the same situation about being stuck between a rock and a hard place. They're going to cut production. Oil is now already at $50. It's going to be extremely interesting to see the US output production come next week. We keep seeing this race between cutting production, price of oil going up, US output production increasing, oil going back down, only for the cycles to repeat itself. So extending the cuts didn't make any difference to the price of oil before, in terms of they cut production in November last year, which is, you know, there we go. And fine, look, we saw oil tick up, but then we saw it decrease once again. So when shale oil production kicked back up, going all the way down to test the 44. So in my mind, I don't really see what benefit they're going to have in the medium to long term by continuing to cut production. In fact, I think they should more stomach the fact that oil is going to remain lower, as opposed to trying to continue to talk up the market, because as we know, the more they do this and the less effective it is, then the less the market's going to react to it. But I imagine this has an aspect as well with Saudi Arabia, particularly because Saudi Arabia was quite keen on bringing the price of oil up as well, is the fact that they have their IPO of Saudi Aramco, so they want oil prices to be trading relatively high given that IPO. So in terms of where I think oil will be going today, I would not be calling a short on oil. I think, look, be a bit conservative with your entries, but definitely be looking to get in for a long. At least the short-term sentiment is that, look, OPEC has in fact intervened and tried to talk up the price of oil. And look, where do we find support? We found support on the low of the 17th and the 18th of May. It was a double bottom. Great place for people to book profit, people to sort of come to their senses and say, actually, look, we have the biggest producers of oil looking to talk up the price of oil, if not actually action cuts to bring the price of oil up. And we found support and we're trending higher today. Getting above 50 is going to be quite a key level of resistance on the upside, and be very interesting to see if we can sustain ourselves above there. Of course, the way that I'd see it is if we can manage to get above 50 and sustain and close above it, then that shows that the market is quite confident in OPEC and non-OPEC agreement to bring up the price of oil. If, however, we find resistance there and then continue to trend lower, then I think then this agreement really runs a risk of, or the market is really showing a lack of faith in this agreement. So let's see how we react when we go up there. We've seen some resistance there previously. Obviously, it's an important psychological level. So that's oil. So definitely still looking for the long. If we get above 50, I feel like we may get more of an aggressive push to the upside. As Ant was mentioning, I'm most definitely going to be talking about cable. This is the one pleasure of delivering the brief this morning. So as we can see, it's definite underperformance in. I'm going to end up messing his charts up, but that's fine. 6. Let's have a look. So we got euro dollar tearing higher at the moment, just getting above pivot, and then we got cable trending lower. So at this point, it's important for people relatively newer to the program to understand that these sort of variations in price movements do happen, and this is obviously because sterling is if there's a fundamental change in the value of sterling, then you'll see cable react differently to euro dollar, and this is what we're seeing here. This is predominantly sterling weakness. And why are we seeing sterling weakness? We can see we've been trending lower for a while. Let's just talk about the journey of cable for a while. And as inflation has been picking up, and then we're starting to see a bit more potential tightening of monetary policy coming in from the BOE, we've seen sterling strengthen, as well as the fact that we're seeing the dollar weakness we did see with this Donald Trump impeachment risk, which largely seems to have subsided for now. There's no doubt still some investigations going on, but I don't feel like that is what's on everyone's mind at the moment. At the moment, he's doing his Middle East tour, been relatively successful. My favorite video on the internet last night was most definitely Donald Trump pushing away Dusko Maverick at the NATO meeting, and then just fixing his jacket, which I thought was single-handedly the best moment I've ever experienced when watching one of Trump's videos. So coming into more recent times, Brexit negotiations are not going well. There's been no sort of positive talk. There's all, we're not going to do this, we're not going to do that, we're not even going to pay 1 billion, let alone 100 billion. It's just not looking like we're going to be able to cultivate a good relationship with the EU once we leave, and I think that's fair. I don't like it, obviously, but I think that is fair. But then again, my stance on Brexit is apparent. But it seems like now this is starting to be digested in the market, especially when we're looking at the 1.3 level. We're finding some pretty good resistance there. Once, twice, 3 times. We cut through it a few times, each time managing to get below it, making lower highs. And then what's happened yesterday to today was the YouGov polls, and the YouGov polls showed, let me get the chart up here, showed that the lead for the Conservative Party over the Labour Party was declining. So if I just transition this shot here. So latest polls looking like Tories have lost support in the wake of Manchester attack, but these numbers must be placed in chronological context. there's a couple of things here. It's not just the fact that Labour has been gaining, but it's also that the Conservatives have been losing, which has been tightening up the poll. So back in 2018, from the last YouGov poll on the 18th to the 19th of May, showed that the Conservatives had a 9 percentage point lead. Fast forward just under a week, from the 24th to the 25th of May, they've now got a 5-point lead with a 43% to the Conservatives and 38% to Labour. Political views aside, anything to the far left or the far right will be negative for the sterling currency, particularly in such a global economy where we need to cultivate the relationships with the EU and have a relatively more pro-business stance. And Jeremy Corbyn at the moment, as his popularity is rising, nevertheless still has been sort of uninvolved with the Brexit negotiations so far in terms of providing any sort of real opposition. So this lead coming from him has definitely weighed on the sterling currency. Everyone was fairly confident in Theresa May's ability to handle Brexit. We can see that if we look at the journey through cable, where we had the post-Brexit lows, the blip low of that range when the date for Brexit was announced, and then we've been ranging higher. And then, even though the conversation has been very well with the EU, a lot of people had a lot of respect for Theresa May regarding how she was handling the situation, myself included. So this is just there's one further point to just make on the sterling currency, and that has to do with what's happened to sterling currency, or sorry, the voting intention since the terrorist attack, and that has been, we've seen an uptick in the support of the Conservative, and Theresa May, and a downtick in the support of Labour and Jeremy Corbyn. But this is to be expected. Every time such an unfortunate event happens, of course, there will be a definite push towards a slightly more right-leaning party.
So next up, in 10 minutes' time, think about the release of the latest.
And then finally, let's talk about equity products. So EP, once again, S&P managed to edge out another high yesterday. 6 days in a row now, and VIX is now once again below 10, or closed below 10, closing actually at 9.99%. No doubt there's a psychological factor in those short VIX positions. Let's just get it below 10. But given the fact that the VIX has only closed below 10 nine times since 1990 to 2016, so that's 26 years, and 3 of them have been in, let's say, the past couple of months, is quite incredible. Just once again, we're seeing, only a week ago we saw such a rapid decline in equity prices on the back of the impeachment risk, which was almost ignored for such an extended period of time, where equity markets are rallying higher no matter what Trump was saying or doing, or no matter who he was having aggressive talks with, whether that be with North Korea, whether it be sort of soured relationships with Russia. Equity markets carried on marching higher, and it was then on, with the faith that he'll be able to deliver on the various infrastructure and fiscal plans that he was speaking about. And then when this impeachment risk did come, then equity markets sold off fairly rapidly. And that was because there was another risk posed to the financial markets, where Donald Trump may be impeached, and we got political uncertainty. We don't know who's going to replace him. Of course, Pence would take over, but then is Pence any better than Trump? I'd argue he's substantially worse. But that having subsided, equities have now started to march on higher, and this is once again not showing any regard for any of the risks posed. And I'd like to take a second to try and explain why equity markets are marching higher and higher and higher and higher. So a large part of people's investments will either be in equity or bonds or sort of asset managers in particular. Now we know a Fed hike is coming in. Well, it's priced in for June the 14th. Now, that's a lot can change since then, but there's an extremely high probability that that will take place. So if we do get a Fed hike, then we may see the price of bonds decline. Prices on bonds decline. Funds may then want to put their money into the bond market. So where do they put their cash in the meantime? Well, they'll put their cash in equity markets. And which equity market would be the safest to put it in? Well, then the US equity market would be the safest to put it in, and the top 500 countries associated. So this is the continuing march in equity markets. Where should we put our cash? Well, let's put it in the United States. There seems to be no better place to put our cash in. And so far it's been proving to be a profitable approach. So still looking for a long on the equity products all around. Looking at it technically, we can see the S1 here, a beautiful level of support. Statistically speaking, 6 days in a row, we don't oftentimes get continued move higher indefinitely in equity markets. So I would take it easy if you're looking for more aggressive approaches or extensions of the highs of the day. Wait for a more conservative entry, wait for the pullback, scaling into your position, being able to find an area to enter with a higher risk reward. Otherwise, yeah, we've got my colleague here who's going to come and speak to you guys about the day ahead, if you bear with me one moment. And in the meantime, if you have any questions, I'll be on Trading Live. AC is at my desk right now. Just feel free to private message me, put them in the chat. Thank you very much and best of luck. Ellen will be joining me at the desk. Thank you.